Alright everybody, in this video we're basically going to be going over the pros and the cons of using the aggressive entry method versus the conservative entry method. When you're trading more conservatively, obviously, and you're using the conservative entry method, your risk to reward is going to take a hit, meaning that when you actually take these conservative entry methods, since you're waiting for the candlestick to actually print, the candlestick could be a very large candlestick or the candlestick could be a decent sized candlestick. But essentially, like, our goal as a trader is to try and get into a trade as close to the support or the resistance range as possible so that we can obviously increase our risk to reward ratios, essentially decrease our risk while increasing our reward. Now, when we wait for a specific candlestick to actually print, and then we see the candlestick obviously move away from support and actually close, or move away from resistance and close, what you're doing is you're increasing your stop loss size, which essentially your targets, depending on the trade, may or may not increase. So you're increasing your stop loss size and your target is going to stay roughly around the same, and you have to take the trade that way. So you're going to be decreasing your reward ratio in return, which is going to be the con. Now, the pro of this obviously is going to be that you're going to have a higher probability entry setup, you're going to have a higher probability trade, and you may even actually increase your win rate just simply because you're waiting for specific signals to tell you that, hey, the market is now going in this certain direction, let's take the trade in this certain direction, right? That is going to be the two pros and cons there of the conservative entry method. The only really pro that I see is obviously you're going to have a higher win rate, you're going to have a higher probability trade. And then with the con, obviously, is that you're going to be decreasing your risk to reward ratio while also increasing your stop loss size. Now, with the aggressive entry method, the pro is you're going to significantly increase your reward ratio because you're now using a lot smaller of a stop loss. That is going to be one pro. The other pro is that you may actually see less drawdown in a trade, which will obviously allow you to have a more logical state of mind. You're not going to see a loss much on your P&L, so it'll possibly allow you to hold the position for longer, which is going to be another pro. And then obviously another pro with that being said is that typically when you actually trade with an aggressive entry methods, a lot of the times is you're going to have a lot smaller of a stop loss, because even if you put an aggressive entry with a conservative entry and you guys take roughly an entry on the same move, your stop loss size or your stop losses are going to go in the same area, but obviously with the entry or the aggressive entry method, your stop loss is going to be a lot closer to that support or resistance range versus the conservative entry method, which your stop loss is going to be a lot farther from that support or that resistance range. Now again, the pro is you're going to significantly increase your reward ratio, which is the biggest pro. Now, your pro as well is going to be that you're going to also decrease the size of your stop loss. The cons. Now, the cons are you may potentially lose more positions because you're entering very aggressively, but the reward ratio will make up for that. And you actually may even decrease your win rate a little bit, but again, the reward ratio will completely make up for that. So now we're actually going to go on the charts and I'm going to give you guys examples of exactly what I'm talking about here. Alright guys, so just to give you guys a few examples of basically what I'm talking about here is in this situation here, we have price break above resistance, which typically when we see price break above a previous level of resistance, that is a bullish indicator. We have price break above resistance, make new highs, pull back down and reject resistance. Now, in terms of the entry signal, right, this is going to be an aggressive entry signal here. So right once this candlestick actually closes, that is when we make our entry, because price closed above that 50% pullback rate in a bearish condition. Obviously in a bullish condition where you're looking to actually sell, in that situation you want to see price pull back under that 50%. But obviously if you're looking to buy, you want to see price go up 50% from the rejection. So in this situation here, you would enter off of this candlestick rejection here, which now your stop loss has to go under the low, which is going to be this low right here. Now this gives us a lot of room for our targets. Even if we were to just target the high before we saw the pullback, that would give us a 2-to-1 risk to reward ratio. I'm going to flip this to the other side just to show you guys this is the aggressive entry. Now with the conservative entry, by the time you make the entry and you place your stop loss here, the aggressive entry is already up a 2-to-1 risk to reward ratio. By with the conservative entry, you may not even be able to take the position, just simply because price moved too far away, right? So let's just say we had a bigger target being the next area of resistance, which essentially, realistically, it would be right here, right? So by the time, you make your entry, you're not even going to get a 1-to-1 risk to reward ratio with the conservative method. So I'll give you a real life example. Essentially, when you buy at support, you want to target resistance, which your resistance level is going to be roughly in this range over here, right? Your aggressive entry is going to be in a positive risk to reward of a 3-to-1, but your conservative entry, you're at a risk to reward ratio of 0.53, meaning for every single $100, let's call it, that you risked, you're only up $50. From every single $100 you risked, you had a negative risk to reward ratio. So with that in mind, it's not even going to be a positive risk to reward ratio, and it's not going to be worth taking the position. While the aggressive entry method, you would have been up 3 times your risk, meaning that every $100 you risked in the market, you're up $323 in this situation, which is great. Now, let's say we shot for the moon and we're targeting this area of major resistance over here. On a conservative entry, you're only up 2 times your risk on a huge move. In this example, we're obviously going to go over a few more examples, but in this example, you're only up 2 times your risk, which again, if you risked $100, you're only up $200. On the conservative entry method, on the aggressive entry method, you're up 7 times your risk. So for every $100, you're up $700, which is a huge difference. You can already see the massive pro and the con between the aggressive entry method and the conservative entry method. So even if you would have lost, let's put this into example, even if you would have lost the previous 2 trades in a row, right, and you take this position, you would have made those 2 trades back plus an extra 5 reward multiple. Meaning that instead of being up a total net of, call it $700 if you risked $100, you'd be up $500 because $200 of that gain made back your $200 losses. Versus on a conservative entry method, you have a bigger stop loss. You have to hold the trade for a lot longer because remember, if you're targeting this area for a 2-to-1 risk reward ratio, your job is to try and hold for as long as possible for a 2-to-1 risk reward ratio. Versus with the aggressive entry method, you could have gotten out at a 2-to-1 here, you could have gotten out here, you could have gotten out anywhere in between, right? Let's say you would have gotten out at the top and you would have hit a home run trade, you would have hit a 7 reward ratio or a 7 arm multiple, versus you trading conservatively, you only would have made a 2 arm multiple, which there is a huge difference. Now, I'm going to look for another example over here. I'm going to kind of look for a sell example, which we could look for one around this area over here. So, I'm trying to give the most like clear, crystal cut examples here as well. So, right here, okay. So now let's say that you would have been looking to take a sell anywhere along this, anywhere along kind of like this area over here. Right, let's say price would have came up into your resistance range and you would have hit that sell button right then and there. This is kind of an example where the risk to reward ratios would roughly be the same. Most of the time it's not going to be like this though. So in a situation here, let's say you would have entered the trade right here off of an aggressive entry signal and you would have put your stop loss somewhere around this area over here, kind of above these highs. So if we've identified that this orange line is going to be resistance and we see like highs over here, that's typically where you'd want to place your stop loss. Let's say you would have had a target over here. In this situation, you would have had a pretty roughly the same arm multiple. Your stop loss size would have been just slightly different. In the first position, you would have gotten 7 times your risk. In the second position, you would have gotten 6.3 times your risk. Now, things significantly change over here, where on this situation, you would have actually had an entry opportunity right here. Let's call it your stop loss would be roughly in the same place. Your take profit being down here. And let's say you would have taken an entry off of this retest, which notice how price came all the way back up, retested resistance and rejected and closed at about the 50% mark. This is where you would have taken your sell position on the aggressive entry method, because these entries right here aren't the greatest for an aggressive entry, obviously, because they don't meet our criteria. right? In this situation here, on the aggressive entry method, you would have made 4.4 times your risk, meaning if you would have risked $100, you would have made $440. And on the conservative entry method, you would have made roughly $285 for every $100 you risked. Now, obviously you can see the pros and the cons there in the risk to reward ratios, but let's also look at this from a trade management perspective. On a conservative entry, you would have seen about a 50% drawdown, versus on a aggressive entry, you would have seen about a 25% drawdown, not being a lot at all. And that's a 25% drawdown after your entry that you only saw once. Maybe then you saw like a 10% drawdown right after that, but you went straight into profit right after that. Also notice that right once price was already in profit for your aggressive entry, price was just at break even for your conservative entry method, which is, again, huge. These are all different things that are going to affect your trading psychology when you see drawdown, etc., etc. And now keep in mind here, we saw price go about 50% of the way to the target, and then price pulled all the way back. If you would have continued to actually hold and you didn't get out at either break even or you didn't get out in profit, right? Let's just look at this from a perspective of, you know what, I'm up a good risk to reward ratio and I'm going to get out. On an aggressive entry, you could have potentially gotten out at a 2-to-1 risk to reward ratio. On a conservative entry, a 2-to-1 risk to reward ratio turned into a 1.5 risk to reward ratio. And by then, price pulled all the way back. You would have seen drawdown you would have seen like maybe a 25% drawdown on the conservative entry. On the aggressive entry, you would have seen roughly a 5% drawdown before your targets actually got hit here. Now let's go over another buy opportunity, which again down here, let's say you have major support, right? And price gave you the rejection right here. So essentially this is where you'd want to take the position. No previous price action data. So I'm just going to place my stop loss here under support. So the aggressive entry method is going to enter off of this rejection because it closed above the 50% rejection mark. Stop loss under support. Let's kind of put it here. Take profit's going to be resistance. We're looking at a 3-to-1 risk to reward ratio here versus on an engulfing entry method, my apologies, right? Our stop loss is going to go exactly in the same place and our take profit is going to go in the same place here. Here, you're barely scraping a 2-to-1 risk to reward ratio. Here, you're getting a 1.9 risk to reward ratio versus on the aggressive entry method, you're getting a whole R multiple, being a whole actually more, you're getting 3.34 times your risk. So, in example purposes, when you're trading larger capital, right, and let's say you're risking $10,000 on this position, you would have risked $10,000 to make $33,400 on this trade is how much you would have gained. On this position, you would have risked 10 grand and you would have made $19,700. That is a huge difference. I mean, you're talking about an entire mortgage on a reward ratio. Again, pros and cons. Which trade has a higher probability of winning? This one, because you had already gotten the conservative entry, you already gotten the buy signal right here, versus here, you had just gotten a simple rejection. So you have to keep those things all in mind. I'm going to go over one more. One more example here. So here we have a nice break and retest setup, right? Which obviously, in the part of the course, I believe that's coming in the next section. We're going to be going over the setups themselves. Here you have a break and retest setup, right? Notice how price came up into previous support and actually held as resistance. Your entry would have been on a short position right after that bullish candlestick closed. Stop loss would have gone right above the bullish candlestick high. Targets would be support. So you're already looking at a 4-to-1 risk to reward ratio. By the time you enter off of an engulfing candlestick, with your entry off of the engulfing, your stop loss in the same exact place, you maybe wouldn't have even been able to take the position because you're only getting 1 times your risk. So if you risk $100, you're going to gain $100 on this trade. Versus on the aggressive entry method, if you would have risked $100, you would have gained $424. Again, you can already see how the pro significantly outweighs the con of taking these types of entry signals. And again, in this trade, if you would have risked 10 grand, you would have made 40 grand. If in this trade, if you would have risked 10 grand, you only would have made 10 grand. But again, you have a lot higher of a probability of winning after you took the entry here. So just want you guys to keep all of that in mind. And also keep in mind that price could have easily pulled back. You could have been a 50% drawdown, while here you would have been just chilling in profit, and then price could have gone down. Like, there's so many different scenarios you could have potentially looked at here. But I just wanted to show you guys again the pros and the cons, give you guys some live chart examples of the pros and the cons of the entry versus the conservative aggressive method of entering the market. These types of signals. Hopefully you guys did enjoy this video. Hopefully it did help out and give you like a clear view of what direction you kind of want to enter the market on. Other than that, I will talk to you guys in the next video.